Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Julie Sweet, CEO of Accenture. Julie, nice to see you.
Great to see you.
You recently announced earnings, and I'm wondering what the highlights of that were.
Well, lots of excitement about Gen AI. So we announced that we are investing $3 billion over the next 3 years, and that in the last 4 months we have already sold 100 projects. So taking an early leadership position.
Want to ask you about revenue because there were some concerns about revenue guidance and that being a little bit less than what you had anticipated earlier in the year. Is that right?
Yes, we did take the top end of our range off because what we saw in the last quarter was that small deal projects have come down lower than expected. It's something we've been signaling all year, mostly in North America, but it expanded a little bit. And also our comms, media, and technology industry group also declined more than we expected. However, really solid sales and revenue and very strong profitability. And not for nothing, but we now, year to date, have 85 clients who have done $100 million or more in bookings in a single quarter, which is 11 more than the same time last year. And so I think for us, the big headline is that transformation continues. All roads still lead to technology, and we're really well positioned to catch the next wave, which will be AI-driven.
I want to ask you a lot about AI because obviously you've gotten some big headlines on that announcement. But before we do that, maybe we could take a step back and talk a little bit about what drives Accenture's business and the key parts going forward.
Terrific. Well, it starts really with technology. And when we look at the next decade, we see 5 forces of change. One of them is total enterprise reinvention, which is the strategy to reinvent every part of your enterprise with tech, data, and AI at the center, and then needing to work differently to have different talent. That plus the second force of change, which is talent, the ability to access it, to create it, and to unlock it, are 2 of the biggest drivers of our business today. At the same time, we see sustainability, the third force of change, the convergence of the physical and digital world, and the ongoing tech transformation as absolutely critical to our clients, and so also critical to us. In fact, we just made an acquisition in Brazil on sustainability, and we've been really focusing on sustainability around the world as being another trend. And our business really is always looking out while addressing the needs of our clients today.
When you talk about technology, Julie, does that mean that the technology sector is a key industry group for you, or do you serve all manner of industry groups?
So we serve 13 different industry groups, so we're very broad-based. In fact, our business model is all about diversity. Nearly 50% of our business is in the US, Europe's about a third, and the rest of the world makes up about 20%, 13 industry groups, and also very diverse in terms of services. So everything from strategy and consulting to operations and managed services. And actually, our secret sauce is the way that we bring it together. And we are the transformation partner of choice to big tech transformations. And for example, DuPont, a household name, we've been working with them for 35 years. They are doing an incredible transformation that's about data, resilience, product innovation, M&A, and we're right at the center of it.
You mentioned sustainability. How important is that to your business going forward?
Sustainability is really important as you look at the next decade. Today, it's a big differentiator because what we tell clients is if you spend more than $5 million on any project, make sure that your sustainability officer is at the table. For example, if you are replatforming on a big ERP, chances are that if you spend the money up front, you will actually spend less money by already thinking about what kind of reporting is needed. And so we really want our clients to not spend money down the line, but instead to embed it in their digital transformation. And that message really resonates with our clients. They appreciate that we're investing up front to help them achieve their objectives.
There's a lot of talk about the $2 trillion that the government is going to be spending on upgrading infrastructure, sustainability, IRA, and the 2 other bills as well. How does Accenture play there?
Well, very coincidentally, we just recently announced that we are buying Answer Advisory, which is a 900 person professional services company that works on capital projects, particularly in the public sector and utilities. This is a new market for us. We have a very small practice today. It's an $88 billion addressable market, growing really well. And that acquisition is primarily a U.S. acquisition. So we're really excited. And what we do, Andy, is because of our ability to invest at scale, we're investing at any given time to scale things like our consulting practice, more industry and functional depth. We invest to scale hot areas. So we've done a lot, for example, in cloud, but we also invest to create new adjacencies. We did it with our Song, our digital ad agency. We've done it with digital manufacturing, and you're now seeing us move into capital projects.
One big part of this push to develop infrastructure and manufacturing in the United States is actually onshoring. And I wonder if there are implications for Accenture there, or if you've given any thought into how that may benefit your business.
Well, one of the things you really see is that the next digital frontier is digital manufacturing and supply chain, and that plays exactly into that onshoring. One of the reasons why companies are able to onshore in so many more developed countries is because when they do so, they're able to digitally do that, which has higher productivity and lower cost. And we're absolutely helping companies not only think through the strategy, but actually execute.
All right, I really want you, Julie, to drill down into this $3 billion AI announcement that you guys recently put out there. What exactly is this all about?
Well, great. So it's $3 billion, $1 billion a year, and has a lot of parallels to what we did in 2020 when we announced Cloud First and we invested $3 billion in cloud. And we're going to spend the money in three ways. First is we'll go from 40,000 talented data and AI professionals to 80,000. So we'll be doing that through acquisitions as well as upskilling and organic hiring. The second thing we're doing is we're building out a platform called the AI Enterprise Navigator. And what the AI Navigator does is it's creating, within its AI enabled, business cases and helping clients make architecture decisions, and it'll learn as it goes. And so our big strategy is to do compressed transformations to help clients move faster. And this platform will help them identify the business case for using Gen AI and make the decisions faster. The third area is we are going to be creating solutions both internally and with our ecosystem partners. We are really privileged to work with all of the major technology companies, and we'll invest again to create solutions and models that help our clients harness Gen AI in a very cost-effective and speedy way.
How do you distinguish between what's real and important in AI and what's companies just trying to glom onto a hot trend?
Well, that's how we make our money, because that question is what our clients ask us. And what I would say is that Gen AI is real. It will be transformative. In fact, we just did a survey recently where 97% of executives believe it will transform their company and the industry. And at the same time, it's really early. There's a lot of things that need to be worked out. We're also going to need regulation. And at the same time, we can already see the advantages of using it for productivity in areas like customer service. The things I get really excited about is, however, when it's going to be helping us discover new medicines, right? The things that can happen in the heart of industries like monitoring of machines and new ways of, running manufacturing plants. So there's a lot more to come, but the technology does need to mature. And that's why our role is so important with clients, is to help them understand how do they get started, because we think that every company should get started, and then what's to come. And in some cases, our clients will help us shape what's to come with our partners.
What is your thinking about AI and jobs? Obviously, that's a hot button topic, and some people are concerned that it will lead to massive job losses.
Well, we have a lot of experience because over the years, we've been using automation and AI in our business because it's part of what we have to do. We have to increase productivity. And what we've done is to automate and then reskill. And we are passionate that our clients need to, when they think about talent, not only attract talent and be able to work with companies like ours to access our talent, but also become talent creators because skills are changing so rapidly. As a company, you don't want it to be dependent only on other partners or schools. And if you build that muscle, then you'll be able to continuously reinvent your organization and deploy people who have a lot of knowledge, upskill them, and deploy them into needed jobs. So we believe that it's both a great line of business for us to help our clients become talent creators. It's also something we feel very seriously is a responsibility for us to help so that we can use AI really to benefit everyone.
Speaking of workforces, what about your own workforce, Julie? And have you been looking to expand, contract? Where does that stand at this point?
Well, let me start with AI in my own workforce. I became the global CEO in 2019, and on my very first webcast, I introduced something we called TQ, which was to say that all of our then 500,000 people, we're now over 700,000, was asking them to all take courses and pass assessments in core technologies, one of which was AI. So we've been investing in working on AI for a long time, and we do see it as a core competency. And actually, many of our clients are now starting to buy from us that same TQ because they see it as well. We believe that we're going to be continuing to expand our workforce because we're growing.
I want to shift gears a little bit and ask you about the economy and ask you specifically what your customers are telling you. What indications are you getting from them about where things are headed?
There's a lot of uncertainty. We all read the same reports. What I think is interesting is that there are different dynamics around the world. So inflation in the US is being driven by supply chain, is being driven by a tight labor market. But when you go to Europe, inflation is being driven really by energy prices. And there's a lot of concern as to, to make sure that the remedies for inflation are really fit to the cause. And so that's something we're watching really carefully. I think what you're also seeing in the market, however, is that to build resilience, the ability to withstand, adapt, and then prosper through tough economic times, technology is really one of the key solutions.
Another topic is diversity in the workplace and inclusion. I know you've been a big proponent of that at your time, during your time as CEO. Are you concerned, though, about a backlash?
No, I think it's interesting because there's a big connection between the age of AI and diversity in our view, because the age of AI really requires innovative thinking. And there's lots of great studies that show diversity drives more innovation. And so we see a real boost in business value for companies who are focused on diversity. And one of the things that we are really careful to do is to make sure that we ground the case for diversity in the business case. And whether you're a consumer goods company that wants to tap into different markets, like look at the US and the market, for example, among Latinos, or if you're a company that's B2B, but you need to completely reimagine using AI how to get productivity, innovative teams are diverse teams.
And let me ask you, how and when do you decide to speak up on social issues, or do you not at all? I mean, this is a big question for CEOs at public companies now. They're expected to have an opinion. Some of them say they just don't want to wade in.
This idea of when do CEOs speak has been around for quite some time, but we've been really consistent. We speak when we're relevant. And so relevance starts with, does it affect our company? And relevance also is about, do we have something to say? So for example, diversity is something that's very relevant. We have over 700,000 people. We're an innovation-led company. Our clients look to us to be innovation. And so we can speak from experience as to why diversity matters. We also work with a lot of industries, and we know how, for example, targeting different diverse groups helps with building new products and building new markets. So we start with, are we relevant, either because it affects us or we have an expertise.
And final question, Julie, you mentioned your tenure. and I want to ask you about the stock. Stock's been a little underperforming lately versus the S&P 500, but during your tenure, you've outperformed. And so my question is, why should investors continue to hold Accenture stock, or why should they buy Accenture stock?
They should buy Accenture stock because we are still at the beginning of the technology transformation, and Accenture is leading in the technology transformation.
So there you have it, right?
That's it. Pretty simple.
Julie Sweet, CEO of Accenture, thank you so much for joining us.
Great. Thank you. Thanks for having me, Andy.
You've been watching at Barrons. I'm Andy Serwer. We'll see you next time.